The broadcast is now starting. All attendees are in listen-only mode.
Hello, everyone. If you can hear me and see this, or you won't be able to see the screen yet, but if you can hear me, please post in the chat, and we could get started here in a couple minutes. Woo, woo, woo. I see attendee lists, question lists. Cool. All right, perfect. Well, I will say the tariff news is not fun. S&P futures getting whacked. Everything was going so smooth too. All right, I'm gonna stand up. So if you hear the motor, that's the stand-up desk motor. Oh yeah, that's the stand-up desk. Whoa, hey now. I just got my new stand-up desk, although my wires are everywhere. So I'm a little, I don't want to take a picture of it yet. All right. Give me 1 minute and we'll get started here. Because I still see some people rolling in. Hello, hello, hello. No, it's Apex desk, Apex desk. I got it on Amazon. It was about like $560. Let me see if I can find it really quick. Apex standing desk. It's 60. Here we go. Yeah, I got to share the screen. Hold on. Let me get the screen sharing here. All right, I'm gonna do this here. And present. All right, screen. Well, I gotta get my monitor. Okay, there we go. Let's see if the screen works. All right, perfect. This is it. It's Amazon Prime Day, Monday, by the way. Right here. Apex, 60-inch wide, 2-button sit and stand desk. It's pretty good. You could get it assembled for $100. All you do is press a button. Yep, that's it. So it's sturdy. They have some like at IKEA. They were like, I don't know, too cheap. They weren't sturdy. I really like it. I got 4 monitors on it, and it's pretty good. All right, so let's get started here. Boom, 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 boom. Try not to watch the futures. If in the morning the futures are green, half of me wouldn't be shocked. The other half of me would just be like, this is unbelievable. It really would be. All right, here we go. More people coming in. Pep, post-market. I can do that. Oh, it didn't fall that much post-market. Only 60 cents. Everything I'm looking at is hit here. I wouldn't be shocked. I see the names here are down. Facebook down $2. Apple down about 2. What is Baba down? Ooh, Baba's down 3. I would not be shocked because you have to remember Netflix reports earnings on Monday, and it's also Amazon Prime Day. So you could see a big move in the Qs higher. This may be kind of the one dip away. All right, let's get started here because we've got the screen up. Let me make sure this is recorded. Yeah, it is. Okay, perfect. All right, so what I want to talk about is kind of a not a necessarily step-by-step guide, but to give everyone an overview because we are approaching good old earnings season is starting. We have some of the banks later in the week and some of the airliners to kick off the big bang, like Delta, I believe LUV, and in the financial city, JP Morgan. And then we have, again, Netflix, probably the biggest mover out of the FANG bunch on Monday. We got Amazon Prime Day. That's almost an earnings in itself. And then obviously we have many other names reporting in the upcoming weeks ahead. Netflix is the 16th, so that's Monday, right? I'm not losing it. Yep. Okay. Yeah, it's Monday. Perfect. So let's get started. Before we start the presentation, feel free to email me, lance@alphashark.com, or if you really want a quick response, go and message me, twitter.com, Lance Ippolito, and I get the Twitter messages to my phone, or the alerts, I should say. So Twitter's a very easy form of communication as well. I have to read this risk disclaimer. Day trading, short-term trading, options trading, and future trading are extremely risky undertakings that are generally not appropriate for someone with limited capital, little or no trading experience, low tolerance for risk. Never execute a trade unless you afford prepared to use entire investment. All trading operations involve serious risk, and you use your entire investment. No trades or recommendations or advice may not be suited for loss of capital. All trades for education purposes only. Contact your broker IRA for execution, margin, and other capital requirements. Everyone, transparency adheres to all disclaimers. Optionhacker.com, alphashark.com, Lance Ippolito. Oh my goodness. So a little bit about me, blah, blah, blah. I do have a ponytail. I had a real job maybe 2.5, 3 years ago. Well, actually, that was for a fun. I had a real office job at Citigroup Global Markets about 6 years ago, maybe. And, I had short hair, obviously. And then I left the hedge fund industry, went to Costa Rica, and, basically grew a ponytail. But I'm not bald like the Nigerian brothers, but, I like it. No office anymore, and I can work in shorts and a shirt with being barefoot, so I can't complain. So that's a little bit about me. Yeah, I did the whole fun thing, trading, stuff like that. It's fun. Obviously it's fun when you're long, 500 NASDAQ futures or S&P futures. It gets the heart racing for sure. But nowadays I'll stick with my 10 and 20 lots and no longer trading the firm's money as I'm trading my own money. I like weird stocks. Everyone knows that by now. Yeah, I fish almost every weekend, at least I would say. I like weird stocks. Every time I go to my P&L for the year or the account statement, I look at what stocks. So a little bit about actually my history is I had a decent account. I don't know what is considered big, but it was about 64,000. And then I bought a house. So I grew that account from 64 to 90K. But I bought a house recently. So in April, I took that 90K out, put it for a down payment on the house. So now, actually in mid-April, I started a little $5,000 account, and I've built it up for a little bit more than a double. So, I'm like most people out there. I'm not trading, millions of dollars. I literally started this account with 5K and worked my way up. But if I look at what names have moved, or what were the best names, of my trading, it's not necessarily your Facebook and Apple. It's Red Hat, which was earnings, WWE, the wrestling name, which was basically like an earnings event. It was the Fox TV deal. eBay, I think it was some kind of upgrade or something. Shake Shack was earnings. Trip was earnings. Nike was earnings. Play was earnings. C's was earnings. So most of my big trades, Lulu was earnings, have came from earnings. You know, risking no more than about $150 to make, like Red Hat, I made over 1,200% on the options. Nike, I made 1,000% on the options. Stuff like that. It's not your big, you know, Nvidia, Micron names that everyone trades. I stick with the weirdo names. But they moved. I mean, if you look at WWE this year, the stock has doubled. You know, that's a big move. Apparently, I was on a Bitcoin show 2 weeks before the Bitcoin crash. So if I talk to you about crypto advice, run away, because I know absolutely nothing about the crypto market, but I feel like all they do is go down. So if you do have questions during the webinar, hopefully not about cryptos, because I'll tell you to actually run away for anyone talking about cryptos. If you do have questions during the webinar, put it in the chat. I got the chat box right here, and I see it. For some reason, I don't see it. Feel free to ask it again. And or if you don't want to put it in the chat box, you could always message me on email and Twitter. And if I don't do trivia at the end of the presentation, and I won't do wrestling or The Office, unfortunately. I will not do those two shows. Just remind me, and I could give away some goodies. Education is very important, so it's good that you're learning about earnings. Earnings are fantastic if done right. They could be frustrating if done wrong. But for the sake of this presentation, again, congrats on being here. I spent a ton of years in college, and what did I learn? Not much. So let me ask everyone a question out there. What do we mostly trade? If we do trade earnings, or what do we mostly trade in general? Are we looking at stocks via common stock? Are we looking at options, outright calls and puts? And or are we looking at spreads when we trade options, like call spreads, butterflies, bear put spreads, bull put credit spreads, iron condors? Because what I mean by this is I don't want to go and talk to you about putting on an iron fly or a call fly if everyone's going to sit there and be like, Lance, what in the world are you talking about? Because I like working with individuals that are relatively new, or maybe they traded in the past, but they don't want to get all complex with their trading and having all these weird spreads and collars out there. You know, for the sake of keeping it simple, I'm mostly trading right now outright calls and puts ahead of earnings, not even spreads. But of course, if you are a spread trader, you can always spread the trade out. But for my sake right now, I've been focusing more on outright calls and puts, which is simple. You know, an outright call, if I buy it, I think the stock is going to go up. If I buy an outright put, I think the stock is going to go down. So for this presentation, for the sake of this, if I do say, hey, I was looking at calls, you can, of course, say, well, I can look at call spreads, or I can look at selling bull put credit spreads. But I don't want to get too complex, because the goal is to keep it simple, stupid. And usually when I have a bad day, I consider myself stupid, because I trade for real. It's real money. It's real results. And I'm a real loser at times. There is no doubt about it. Some days I put on trades and I lose money. I bought some Array Pharmaceutical, some biotech calls, and the darn thing has not gone up in the past 2 days. It's frustrating. But in trading, making money every day is unrealistic. It really is. There's going to be one day or two, I don't care how. It's just like Tiger Woods or Phil Mickelson. Sometimes they're not going to qualify for the golf tournament. So losses are a real thing, and if you can accept being a good loser, you'll probably sleep better at night. The main thing I try to focus on in trading, what is the greater good or what is the goal of the account? This is a question you should ask yourself. Do I want to make $100 a day, $200 a day, $1,000 a day? Do I want to double the account? Do I want to try to get 10% on my account, and do something more conservative? Stuff like that. It should all be a part of your strategy. So my game plan out there is this. You have to find what's good for you. Day trading, swing trading. Again, are you looking to make 100, 200, 400 a day? Is it more of a weekly thing? Why do you have the position? Is it a buyout, a technical breakout, a trend strategy, or of course, an earnings event? This all comes with different risk. For example, if I have a small account versus a large account, I'm not going to go crazy buying, hundreds of Netflix calls in my 401k account for earnings, and then Netflix is down, $50 on earnings, and the calls go to zero. This is something that I need to accept the risk when I go into earnings, because most of the time earnings are a binary event. Now, if I have a small account, let's say again, like me, I have a little 5K account, or I did have, now it's about 11, and the money goes down. Let's say I put a big Netflix call options on ahead of earnings, and Netflix sells off again, $50, and my calls go to zero. So I take a hit. I'm not gonna, cry and pout at night, because I accept the risk that I'm getting into. So again, know your risk when you're putting on trades, especially earnings trades, because one comment, in the conference call, or one thing on earnings can send the stock from up 10% to down 20% really quick. If I have a big account and the account goes down 50%, I'm going to be, devastated. But if I have a small account and it goes down, but I have that money for an aggressive strategy, it's not going to hit me No, Nancy. I would email Andrew at AlphaShark. I don't know what course, but I'd email him and he could get you an answer. This is something completely new that I'm actually said, you know what, 2 hours ago, I'll do it. So, literally. So the first thing I like to look to, email Andrew at AlphaShark. He'll get you everything. The first thing I always like to look at when I look at a name. So let's say, what's a name that reports this week? We have JP Morgan, Delta, Citigroup. Let's use one for example, and let's use, we'll use JP Morgan. Yeah, JP Morgan's already up here. So the first thing I like to do when I look at a name is look at the chart. And what is the chart relatively to the trend of the stock on a daily time frame? So I look at something here in JP Morgan, and I can ask everyone out there, hey, what is JP Morgan? Is it bullish? Is it bearish? Is it sideways? When I look at a stock like JP Morgan here, with a name like this, I tend to think, hey, this is a pretty sideways chart, right? So my directional basis on something like this is going to be very minimal. So therefore, I have to go beyond the chart. Because just because something has a bullish chart or a bearish chart, that does not forecast the earnings report of the name. The chart is the overall trend, but earnings, again, are a binary event. One comment can move the stock up or down. So I can't really say, hey, the chart's bullish, the stock's going to go up, or the chart's bearish, the stock's going to go down, because I am looking at earnings. Do I like to get an overall view of how the name reported in the past? Of course. So what I can do by that is look at the previous quarters. What I mean by look at the previous quarters here in the earnings report is I like to go back and look at the history. So JP Morgan, when it reported last April, the stock gapped up, then went down. Okay, that does nothing for me. I don't want to see a stock gap up and then go down a little bit. Prior quarter, the stock gapped up, But again, it only gapped up about $2. It's not a big move. Prior quarter, JP Morgan was flat. I'll call flat, I'll call flat, small gap up, and then back in the previous quarter here in July, JP Morgan gapped down a little bit. So looking at the prior history, stock does nothing for me. Nothing. The prior history in JP Morgan is one up, flat, 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 does nothing. So therefore, I have to dig a little bit more. We can't solely go by the chart. For this is a tool a programmer developed, and I'll get into it, and I may be able to share it or not. I'll have to see, but we'll go into pretty much what everything how we're getting these numbers to where you can do it at home. So don't feel like it's something that is only available. We can get it. We can find a way out to get it here. Actually, let's do this after the insider, or we'll actually do that after we look at the insiders. So what I like to do, and here's a couple websites you can look up, is look at the insiders. So the chart gave me nothing in JP Morgan, right? Therefore, nothing's sticking out in JP Morgan. So what I like to do, let's say I'm looking at a name, it could be Nike, it could be Restoration Hardware, it could be Red Hat, which was a recent really good one. I always like to look at what are the insiders doing. This is probably one of the top information data sets that I like to look at for earnings. What I mean by that is this. Let's go back to the chart, and here's a weird name. Anyone ever hear of the stock called Price Smart, PSMT? PSMT. Anyone heard of that stock ever? It's called PSMT. It's a Latin America. We'll pull it up here. I'll type it in. It's called Price Smart. We could actually go to Thinkorswim. PSMT. It's a Latin America consumer staple company that basically it's like a warehouse club, kind of like a Costco for Latin America, right? Really weird industry because most of us, currency risks, a lot of things affecting Central America, Latin America right now. But it's like a Costco or like a Sam's Club. So looking at it, go, oh, Sam's Club, Costco, these names are very bullish. But what I found interesting in the chart was phenomenal. The chart was, look at this chart here. This chart was going straight up. Everything looked good. Prior earnings history gapped up higher, gapped up lower the previous quarter. So I know it's a gapper, but a huge move into earnings. Earnings comes, stock goes from 94 to now 77, but it gapped down to about 83. Huge move lower. So what I find interesting is this. We go back to the presentation and we look at, again, the websites. And let's pull up a website. And you can do this at home. My favorite is insidercow.com. This is my favorite website to go to for an earnings, for insider activity. There's also names out there like openinsider.com, but all you do, and my favorite again, Insider Cow, and I'll type in the ticker symbol, PSMT. It's called Price Smart. So I look, and the first thing I like to look at is is there insider buying or selling? So every time an insider, like a director, CEO, or person within the company that sells a large stake or the stake of shares, it gets reported here. So what I like to do is look at the date. So if I'm trading an earnings event, I want to make sure the earnings date captures the previous quarter of the event. So what I mean by that is, if I'm looking at a July earnings, I want to see names, I want to see insider transactions from about April, May, and June. So when I look at PSMT, I see, hey, there's activity from July 2nd here. I'm like, oh, July 2nd? Wow, that's very recent, right? July 2nd? Huh, what is this guy, and it gives me the name of him, Robert Price, who's a director. What is he doing? Oh, I look here. Here's the date, July 2nd, 2018, common stock. He disposed, I get his address, I get everything about him, Robert Price. He disposed about 10,000 shares at $89.53. At $89.53 of stock. Okay, that's a little suspicious. We go back to the chart. $89.53 was, oh wow, where are we? Woo, right here. $89.53 was right here. Right before the stock dropped to $77. That's a big move. That's a big move lower. Wow. He picked almost the high, the all-time high to sell the stock. Huh. Is it coincidence, or does this give me something to go off? Let's look. I could look too. Here he is, Robert Price again, this time on June 18th. Huh. What'd you do here, Robert? Take a look at it. Oh, Robert's selling more shares at 89 and 88 bucks. Interesting. I'll continue to look. Here's him on June 4th. Date, June 4th. What did he do here? Oh, he sold more stock. 10,000 at 84.97. So I'm picking up on a trend. Why are these insiders selling stock? Now I'll look at Frankie Ramon Diaz on May 16th, my birthday. What did he do? Oh, he sold shares at 82. I'm starting to pick up a trend here that these insiders, here's another one, Jesus Chong Vong, like that name. Oh, sold some shares. Why are all these insiders selling shares of stock? Now, I'm not saying this is 100%, if insiders are selling shares, the stock's going to go down. No. We have Facebook, Zuckerberg, and a few other people sold shares. The stock went down, and then obviously Facebook hit new all-time highs. They could be selling it for, tax reasons. If it's a biotech company, maybe that's where they get their income because they don't pay themselves salary. But I do find it very odd that we looked up 3 or 4 directors of the company and all they did was sell shares. So this is something I like to go on. Probably one of my number one things to look at to see, hey, are people buying or selling the company stock? Now, if it's a company like Google or Microsoft, and I see some people sell shares, I'm not going to lean on that much because these are big companies. They trade millions of shares a day. Of course, people in Microsoft are going to sell shares because a lot of their wealth is tied up in the stock price. It doesn't mean that Microsoft is done and the company's going to collapse, but they could just be selling shares as part of their investment portfolio and such like that, maybe for tax reasons and stuff like that. So I don't want to lean slowly on them buying or selling shares if it's a big company. What I mean by big company, a company that trades a bunch of stock. If it's a smaller company, like maybe an American Eagle or an Etsy or let's say even something smaller like a MGM or Las Vegas Sands, or maybe some company like Under Armour, something like that, then I'd be a little bit more, why are they selling shares? Why are they selling shares of stock? So I like going on Insider Cow, Open Insider's another name, to see, hey, why are they selling or buying stock? If they're buying stock, that's probably going to lean me a little bit to the bull camp and say, hey, insiders are buying the company's stock. That's a really good sign. But if they're selling it, it's going to raise a red flag. So the first question I always ask before putting on a trade, because that's what we're going to go to next, is not how much I can make, but how much can I lose? Remember, earnings, binary event at the end of the day. One comment can move the stock up or down. So I need to identify what trade I want to put on. Do I want to trade an earnings trade for this day? Do I want to hold it? Do I want to make it a longer term trade? Is it, again, earnings or a merger, something like that, to where it's a binary event? What I like to do is this in combination here. So not only do I like to look at the insiders, like in Red Hat, but I like to look at the options market as well. And Red Hat, we'll go over this example because this was a pretty big winner. Again, over about 1,200% return. So we have RHT, Red Hat, it's an application software company. You know, again, if we were to look at this chart here in RHT, this chart is to the moon. This is one of the best charts I've ever seen. The stock has gone straight up, right ahead of earnings. The stock was around 170. Earnings comes out, the stock goes from about 170 down to 145. Boom, that's a huge move. And we'll get over why such a big move. But if we look again at our website, like an Insider Cow on RHT, and this was very recently, oh, we have some activity in May. James Whitehurst, who's the CEO and president, what did he do? He sold a bunch of stock, 20,000 shares at 164.5. Huh, what happened to the stock? Well, here it is at 142. How does the CEO know when to sell shares of stock? You know, did he know the earnings were going to be bad? He's the CEO, probably. That's why he probably sold a bunch of shares of stock. So again, who knows more about the company? The people who work for it. And we actually have a couple people, Alexandria Lisa, she sold about 18,000 shares at 164 as well. So again, a lot of insiders, EVPs, CEOs selling shares. That's a big move. What I also like to do is this. So I'm looking at, you know, what are the insiders doing? I like to look at the options market. What the option market gives me, and we could go back to our JP Morgan example, it gives me an expected, how do you read if a sale is pre-planned? What I like to do, Mark, is the day of the earnings event or the day before, I like to check that Insider Cow or Open Insider and see, you know, has there within the past 3 months been any insider buying or selling? How we can see if it's bought or sold is when you look here at table 4 on the form here. Now again, this is public. If you see a D where it says securities acquired or disposed, and A means they bought stock, so they acquired stock. D means they sold stock. So if they dispose shares, they sold shares. Again, I don't know how much they own. Maybe RHT CEO, maybe he owns amount of securities owned following. So he owns about 365,000 shares. He sold about 20,000 of them. Obviously, he's not selling his whole company, but again, a big he did sell a bunch of stock. It will be under D for sold or disposed and A for acquired. So, you know, if the company CEO bought shares, obviously it's going to be very, very bullish. So what I can do too, when they sell, they have to file it. They have to file the report with the SEC. I'm not sure what's the time period without it, but once they do make an order, they have to file it, and that information becomes public. And you can see via the share price and stuff like that it's real. So now looking at the options and the option chain of the earnings event. So the options give us another clue from the market makers to the trader's point of view. Now we'll use JP Morgan for this example because they have earnings this week. Now, when you say, Lance, what's unusual or what's going to stick out on JP Morgan? You know, is Jamie Dimon buying or selling shares ahead of the earnings report? No. Is JP Morgan going to shock the world and the stock go up, 20%? Probably not. It's a bank. So for the example, we can still use this, the options chain for information. Obviously, I don't have a big view on JP Morgan. There's nothing unusual about it, but we can get a few things covered by looking at the options chain. Number one is this: the implied volatility. How you can find out a company has earnings, obviously you look at the earnings date, but you can look at the option chain, and IV is going to be high for earnings. Why is implied volatility going to be high for earnings? Because there's a lot of demand for options, and there's a lot of uncertainty of where prices will go. So when demand goes up, IV goes up, option prices go up. So we see JP Morgan's with a 29% IV for this week because of earnings, and we can see it go down in the following weeks because there's no more uncertainty or there's no more earnings event out there. We can also look, this will be a good example of Netflix. Netflix, we look at the volatility for this week, and it's only at 37%, or implying about a $12 move. But for next week, because next Monday Netflix has earnings, look at the change in volatility. It goes to 71%. And every day, till we get to that earnings, this is probably going to go up. I would not be shocked to see 100 or a 90% IV on Netflix earnings when they report, or the day of the report. So therefore, right next to implied volatility is the market maker's expected move. How we can find that is adding an at-the-money straddle. So for Netflix, the stock's at $4.15. I can add for this week, and you can do this for the earnings week as well, $6, the price of the call, and about $5, I'll say $5.30, the price of the put. And we see about $11.50 is the at-the-money straddle. Or, for my people who like to do it quicker and easier, you can just look right here, and it says about 12 bucks. So Netflix is implied to move about $12 between now and Friday. Now for earnings, Netflix is implied about a $40 move for earnings. And that is up or down. That is not, again, straight up. So if Netflix beats earnings, the market makers think it can go to $4.15 plus 40, so about $4.55. And if Netflix goes down, then we do $4.15 minus 40. And what are we looking at? Can Lance do math? Maybe about what, $3.75? So we have an upside target of $4.55, a downside target of about $3.75 according to the options out there. Now, if we want to do a quick view, we could go to our good old chart and type in, we'll do JP Morgan, and it actually does it for us. And here we go, JP Morgan says it's implying about a $2 move on earnings, or a little bit over a $2 move. Go to my chart, and 106.62, add $2 to the upside. The high-end market maker's expected move range is about 108.52, and the low end will take away $2 from that, or about $2, and it's implying about $104.70 for a downside target. Oh, 365. Thank you. I'm horrible with subtraction. Thank you. So now we have a range of where the stock can move on earnings. So JP Morgan, about 104.70, or if it misses, if it beats, around 108.52. Now, when we're trading options, and we'll get into strategy, and especially in the master course, is if we're buying or selling options, if we're buying a call, we want JP Morgan to exceed the market maker's expected move. So we want to see JP Morgan go above this range. And if we're buying puts, we want to see it go below 104.70. When we buy an option ahead of earnings, we want the market makers to lose. So they're betting that it will be within the expected move. How we win if it exceeds and get directional when we're buying calls and puts. We'll get into it in about 5 minutes, if that. So let's go continue to look. The next thing I want to get into is now we can look at, hey, what is the option move implying? What I have the benefit of doing, and what really everyone does out there too, if you look, and this is, available on Thinkorswim, is looking at the options market. And again, my specialty is odd stocks. I love names like, American Eagle, Urban Outfitters, Nike's even a little bit odd to me. Weight Watchers, like WWE, Play was a big one on earnings. I like to find stocks that are a little bit odd. What I mean by that is I know JP Morgan and Citigroup are going to trade tens and thousands of options ahead of their earnings event. But a name like Red Hat, how many options does Red Hat trade a day? When I look at something like that, I look at my option chain and I go, Red Hat. Red Hat, I never even look at this stock. They trade 3.6 million shares a day. But when I go to it, I like to scroll down to option time and sales, right? And I like to look, what's the biggest order of Red Hat during the day? 350 lots. And then we have 100 lots. How many options did it trade? 8,000 calls, 2,600 puts. Okay, it traded almost 10,000 options today. That's not too shabby for RHT. But again, most of these are 100 lots, then 50 lots. So I know these are mostly retail traders, 50, 30, 30, 30. These aren't really big orders for RHT. What I do find interesting when I do search a name ahead of earnings is looking to see if any orders stick out. How I do that is I like to look at an option scanner, or like this, or I can look at time and sales, and that is completely free. So when I looked at RHT, this was part of me, a little history back. When I looked at Red Hat on the day before earnings, because it reported after the close, I believe, someone came in and bought 700 of the weekly 160 puts for $2. Now at the time, Red Hat was trading at 165, so right up here. So someone bought the 160 puts for $2. The expected move in RHT was about $7, up or down. So if it was $7 to the downside, traders or the market makers were thinking RHT would be at 158 if it missed earnings, 158. Pardon me, the implied move was $6. We'll just say it was $7. So the 160 puts were $2. They were $2 when the trader bought them. I go, man, they bought them on the ass. This is aggressive put buy ahead of earnings. Something seems a little fishy in this trade. So therefore, RHT came out. The stock gapped down to 144. So the market makers were thinking it would go to 158. It went down to 144. So this was a greater than expected move to the downside. The crazy part is this was on a Thursday. These options expired tomorrow on Friday. The trader closed them out from $2 to $17.82, and that is 10 minutes before the close, before they expired. So this trader made almost 900% on their money. Absolutely unreal. Just following we looked at insider cow. We saw insiders, the CEO was selling. We saw aggressive put buying in the options. And what I did was I just piggybacked on the trade. So all I did was I bought the actually 157.5 puts, and they were $1.35 when I bought them because I didn't want to spend $2 on an option because I'm cheap. And what happened was the options went from 135 down here to 1560 overnight. I think I sold mine at 1430. So a one lot, I sold it at 1430, I want to say. But the one lot, if you sold at 1560, turned $135 of risk per one lot into $1,560 overnight. In my example, I did 135 to 1430, or $1,430. Still freaking fantastic, over 1,000% return on an option, and that's again on one contract. So pretty wild to see. Reading order flow or figuring out the puzzle. Why I love earnings so much is I want to put the pieces to the puzzle together, and this is what we're going to talk about in the 2-hour master course. Is I want everyone out there to not be dependent on me. I tell all the traders I work with, I have a lot of retirees in Boca. I have some poker pros who travel from Vegas and they travel all over Europe. I always say, look, we'll work together, but after a couple months, I want us to be more friends, to bounce ideas off each other, not be dependent on each other. Because I want everyone out there to put the pieces to the puzzle together so you can get in a routine to do it on your own. So you don't have to depend on me. You can say, hey, I know the steps to go through, and you could start putting or playing the puzzle yourself. So what I like to do is, look at other names in that sector. If it's financials, are they buying calls? Is there a ton of flow in the banks? For example, Lanier KBH reported, I believe last week or the week prior, and instead of buying those juiced up options in Lanier or KBH who had earnings, traders were buying DHI and Toll Brothers, other home builder stocks, to play a big beat on Lanier or KBH earnings. So these traders were so smart, they started buying calls in DHI and Toll Brothers, because if home builders start to go up, let's say Lanier goes up on earnings in KBH, other home building stocks are going to go up too. I mean, if we look at that on Monday when Netflix reports earnings, if Netflix goes up $50 after hours, the chances are Facebook and Google and Apple are probably all going to go up too after hours because, again, Netflix has a decent presence in the NASDAQ. If those Momo names beat, you're probably going to have them all move together. Is it always right? Heck no. Nothing's ever certain, 100% certain, but the whales or the smart money is, what I say, they're way better than I am because, again, they have better information, they have insiders, stuff like that. So Nike reported earnings, what was it, last week or the week before? What was Nike? End of June. So Nike had earnings with a huge move. Anyone remember Nike earnings? This stock went to the moon on earnings. This stock went up from 72 to 81, taking out an all-time high on earnings with a big beat on earnings on Nike. So I got in some Nike calls. I got into the weekly 75s for 50 cents, and I sold the calls for 480. So almost 1,000% return. If I would have held on, I could have sold them at $6. Obviously, I'm not perfect, but almost 1,000% return. So $100 into $1,000 on Nike calls. But what gave it away was this. Trader came in and bought Dick's Sporting Goods weekly calls. Who in the world buys Dick's weekly calls? Nobody. I could probably sit here for 40 weeks out of the year and I won't see one Dick's call buyer ever. Here, I'll even pull up a Dick's option chain to show everyone. Dick's, I'd be shocked if Dick's traded more than 100 weekly contracts today. Oh, it traded 131, and then 33, and on the put side, 10 and 24. So barely nothing, right? Barely no options traded in Dick's today. I mean, literally nothing. So, especially in the weeklies. So I said, why is some idiot, he didn't turn out to be an idiot or she, why is someone buying 700, 600 Dick's weekly calls on Thursday, the day of Nike earnings? What? And they're buying, the calls, they're pretty cheap, 35 to 55 cents. Why is this idiot buying Dick's calls? And I said, Nike has earnings after the close. So maybe they're playing Dick's. Dick's sells Nike shoes, Nike clothing. Maybe they think Nike goes up, Dick's goes up too. So then I look and I see a trader buy about 800 July 23 Under Armour calls for $1. That's a little odd. Traders risking a decent amount of capital, about 76,000 plus bucks, buying some July 23 Under Armour calls. That's a little weird. Well, if Nike goes up, Under Armour, Dick's, Foot Locker, all those stocks are going to go up. So that was a little bit of an odd trade. And then they started buying Nike. Next week, 73.5 calls, 4,000 of them, another 4,000 of the 72 calls for $1.80. And then a trader, and this is why I took the trade, bought 3,000 Nike weekly 75 calls for 58 cents. I actually got filled at 50 because I waited a little bit more. I was a little bit more patient. So there was a lot of bullish flow in Nike ahead of earnings, but not only Nike, because again, I don't want to say, there was big call buying, the stock's going to go up, but there was call buying in similar names to Nike. And what happened? Nike comes out, big move. Stock goes from 72 to 80 plus. Here's good old Lance. His calls go from 50 cents to, I wish I could say I got out at $5. I got out at around 480 though, because I didn't hold on. And here are the calls going up to 566, and they actually traded up to over $6 with over 1,000% return and the option, which is crazy. So again, a two lot of $100 of risk turned into $1,000 on Nike. These are some of the trades that, these are very recent. What is Nike? End of June, and then Restoration or RHT Red Hat was again end of June as well. These are recent trades for earnings. Now, I'm not saying every earnings is going to be perfect, right? Some names will go wrong, but it's proper risk allocation to the trade. If I can risk 1 to make 10 or risk 1 to make 5, these are phenomenal trades. So we have some questions here. What happened to Dick's and Under Armour calls? We'll take a look at that in a minute. But before that, I want to get into this before we run out of time. Dick's popped about 3%. Under Armour was up about 2 to 3% after Nike earnings. So those Dick's calls went up about 300% in value, actually. And the Under Armour calls went from about $1 to $1.80. And yeah, I have a spreadsheet of names that I feel like trade really well on earnings. So we have this going on at Alpha Shark. We have an earnings master course with trade alerts via text message. I'm not sure if they go out via email too. I'd have to check with Ralph at Alpha Shark, but I know their text message, probably email too, actually. So it's a 2-hour master course with a step-by-step approach for trading earnings. And this will go on in the heart of earnings season. So as we start approaching earnings season with the big names. So I'm probably going to save it to where all the big names start to report. So it'll probably be next week or the following week. I'll have to look at my earnings calendar to see where you can ask any questions. It will be more of a one-on, well, it will be a small group. So where all the questions will be answered. A month of trade alerts via text message. I want to say email too for everyone out there. And then a brand new, not the indicator I showed you. It's going to be way more complex and will have way more information than this indicator here. I'm not sure if we could give this away too. I'm sure if you sign up, we could give this away actually. But it will have information similar to this, but just have way more data with the indicator taking in volume in the options market. So you don't have to pay $350 a month for trade alert because it's very expensive. And then you have to customize it, which can cost even more money, stuff like that. So the earnings indicator will have option volume on it and the market maker's expected move. Just the indicator itself will be $2.99 once released, just because that's what all our indicators are. But for today, you get the master course. It's 2 hours, a month of trade alerts, and the earnings indicator for $249. So basically $50. $50 off the price. And I want to say that will be sent out probably no later than 3 weeks to be on the safe side. I assume though, Brian, the programmer, said he's going to actually says he's going to get it done by this Sunday. But of course, I like to be on the more conservative side before before promising anything. So that's what we have going on at Alpha Shark. We can get into all questions and examples now. If the link I sent will look like this in the chat, it's Alpha Shark /V Shark, because Ralph didn't have time to update it, and it has $2.99 here. So all you have to do is send me an email and say, Lance, I bought the course and the earnings indicator. Will you take $50 off the order? And what Ralph will do, who handles our account management, will take that $50 off the order when he's back. So I think it will be tomorrow. So this was the only link we had. Andrew wanted to do $2.99, but since it's a pre-release and we're doing the course with it, we took $50 off the price. So it's not $2.99, it's actually $2.49. So just shoot me an email and we'll get that adjusted for you. If you say, Lance, hey, I purchased it, it's at $2.99, we'll get you that $50 refund. No problems there. Not the 25K challenge, but Lance did a 5K challenge that I doubled, and I'll show. I have no shame. Actually, how do I show this? Here we go. I get screwed up on commissions pretty hard. Here. I don't know why I pay so much in commissions, but look at this here. Where is it? 10,400 is my net liquidation, but my commissions are $2,000. So I've made over $7,000 off my $5,000 account, but I made over $7,500 on my 5K account, but my darn commissions are $2,100. So I got to yell at Thinkorswim. I've already tried to get my commissions lower, but they won't. HD Patton, shoot me an email and I'll send it over to Andrew. Oh, the name of the websites that I like to get for an earnings list. Good question. I personally just like going on FinViz, but what the indicator will do will actually have, if a stock has earnings upcoming, it will actually plot it on the graph, kind of similar to this. So like Citigroup has earnings upcoming. See how it's already plotted on the graph? The earnings indicator that will be sent out in about 2 to 3 weeks will have this information already on the graphs, plus a lot more useful information. And what I like to do to find earnings is this. I just like personally, I'll go on FinViz, and then I'll go to Screener, and where it says earnings date, and we'll do a step-by-step approach of this in the master course. And then I just like looking, hey, tomorrow after the close, the next 5 days, and then sorting out with volume. So we know in the next 5 days, Citigroup, Wells Fargo, Delta has earnings, and we can actually go for next week as well. And we see next week Bank, Microsoft, General Electric, eBay, Netflix, Cliff Resources, Johnson & Johnson, American Express. They all start reporting earnings next week too. We'll go into detail on this and actually how to play pre-earnings run-up in a stock ahead of earnings. Oh yeah, Roku, very nice. That's very nice. They have insider activity Roku on the Insider Cow. So the link is AlphaShark/VShark. Again, if you do sign up for it today, you get the earnings indicator. It's $249 plus the master course with 1 month of trade alerts as well. Only $249. Once the indicator comes out just by itself, it will be $299. So we're running like a pre-special because Andrew was like, Lance, you got to do something tonight. I'm traveling, blah, blah, blah. And he's like, well, just give it, get it $50 off and do a course with it and everything like that. You just got to fill in for me. So I said, okay, I'll fill in for you. He's like, well, just include a course with it, make it all special. So I go, okay, well, I like courses. I work with traders all day, usually hour-long phone calls. So a 2-hour course is nothing to me. And what I try to do is break down a step-by-step process to get everyone to be able to do it on their own. So you don't have to be dependent strictly on me. You can have all the information, all the knowledge for you to do it on your own. Yes, I post earnings trades alerts. You get the that will be what the trade alerts are. Will be earnings trades, Patrick. They will be earnings trades. And I shoot, on an earnings trade, if I'm, let's say buying a put option or a call option for 50 cents, I want to at least get a double or triple on that trade. So if I find a name that can move, and we'll go about this in the master course, I want to basically screw over the market maker, and I want to look at names that can do that. When you see like Netflix up, $60 on earnings and the implied move was $20, the market makers get screwed. But that's how, when you buy calls or you buy puts, if it goes down, that's how you can make a bunch of money or a big bang on your return for an earnings trade. I want to find names that can stick out, that can move greater than the market maker's expected move. So like on RHT, it was implying about a $6 move. The stock moved down $17. Nike was implying, I believe, about a $3.50 move. Nike moved up, what was Nike? Almost $8 or so. Was that it? 72 to 81? Yeah. So these are huge moves that definitely exceeded the market maker's implied move. And that's what that is the overall goal of my earnings. I want to get the biggest return with the smallest amount of risk that I can get. So that's the link. Anyone have any questions, feel free to shoot me an email or a message on Twitter. And I see the futures are selling off here at the moment. S&P futures are down 29. Trivia, good one. Ooh, gosh, I almost forgot trivia. So you get the trivia question right, just email me, and I'll send it over for Ralph for a free course, not my course, but a free older course for Alpha Shark. We'll do, I can't do wrestling or The Office. So we'll do this. What actor and comedian starred in the hit HBO series Eastbound and Down, who had a very, very curly mullet haircut. And it has also appeared in the hit series Vice Principals on HBO. He was also in Pineapples Express. Man, no one watched Eastbound and Down? It wasn't that long ago. Patrick got it right. Danny McBride. Good one, good one. Can you please spell out the website name for the insider activities? Yes, Helen, it is. I'll give you 2. InsiderCow.com and Open Insider. So Patrick, shoot me an email, Lance@AlphaShark, and I will get to you. And we'll do one more trivia, and then I'll wrap it up here. We're going to do this one about you know who we're going to do it about? Good old Elon Musk. Where was Tesla co-founder, CEO, current one? Where was Elon Musk? Wow. KM already, I didn't even say the question. He says South Africa. Where did Tesla CEO Elon Musk make his fortune as co-founder? Not Tesla. I like how we have Thailand in there too. How did Elon Musk make his fortune? John Schwut, I believe, if I'm saying that right. PayPal. Yes, PayPal. That is correct. He founded an online payment company that was eventually acquired by PayPal. An online payment company that eventually became PayPal. He made $165 million off the deal. Amazing, huh? Yeah, I heard he has. One more quick question on him. How many times has Elon Musk been married? I didn't even know this. No? He has been married, yes. KM, 3 times. 3 times. Good one. He has 5 sons. Wow. Didn't know that. Huh. All right, so if you got any trivia right, shoot me an email, Lance@AlphaShark. Until then, everyone, if you signed up for the earnings course, alphashark.com, alphashark.com/vshark. Shoot me an email. You'll get $50 refunded from the $299, so it'll be $249 It's a $50 special off. And Ralph's email is raf@alphashark.com. I always get it wrong. I call him Ralph. I call him Ralph. Probably 90% of the emails I send, I put Ralph, but it's Raf. Raf. R-A-P-H. Or, pardon me, is it Raphael at Alpha Shark? Oh, maybe I got this wrong. Hold on. It's Raphael at Alpha Shark. Sorry. Raphael. It's horrible that maybe I've been emailing Ralph at Alpha Shark this whole time. Raphael at Alpha Shark. Wow, Lance. You'll get a free trivia, or you'll get the trivia prize is usually a course we have on the Alpha Shark website. So just shoot me an email. And I already got it. PDM, Daniel, perfect. I'll forward them over to Raf in the morning, and you'll get the course. All right, everyone. Thanks again, and sign up, and we'll have a very, very busy next upcoming week's trading earnings. Thanks, everyone.